Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 5th of January 2020, and we're publishing our gold and silver weekly update for the week ending the 3rd of January. Our apologies for the lateness of this update, but we have spent today with a number of politicians debating what is actually happening both in the UK and the United States. And we have returned, unfortunately, much later than anticipated. Gold rose $41 last week from $1,511 to $1,552, having hit a high of $1,569 and a low of $1,510. In sterling terms, gold finished the week at £1,185. That's up £30. And in euros, it closed at €1,389. That's up €37. Silver rose 29 cents from 1776 to 1805, having hit a high of 1834 and a low of 1776. In sterling terms, it closed at £13.79. That's up 21 pence. And in euros, it closed at 16.16 euros. That's up 0.27 euros. The gold to silver ratio rose from 85 to 1 to just under 86 to 1. The Dow Jones closed on Friday at 28,634, down 233 points on the day and down 11 points on the week. And the Nasdaq closed at 9,020, down 71 points on the day, but up 14 points on the week. And the S&P 500 closed at 3,234, down 23 points on the day and down 6 points on the week. Brent crude closed at $68.60, up 44 cents. And WTI crude closed at $63.05, and that's up $1.33 on the week. The dollar index stands at 96.83. That's down just 0.08 for the week, virtually unchanged. Now, we stated in our last two weekly updates that the 6th of January will be an important time for the precious metals markets, as traders are back in work and we can start to glean a picture from normal volume trading again, because until now trading has been relatively light, as not all traders have been fully operative. Now, that said, however, we have seen gold and to a lesser extent silver rise quite considerably towards the end of last week, mainly because of the Iranian situation. And we've produced 3 videos covering this rise and the situation, and they are entitled, Will this Black Swan Cause Gold and Silver Prices to Rocket? Gold and Silver Rise Again but Gold Excels, and Gold and Silver Start 2020 Higher. Now, we've placed links to these below and strongly urge you to listen to them if you haven't already done so, as they put into perspective what has actually been happening these last few days, and it would, quite frankly, be unnecessary for us just to regurgitate the same information here. Now, you may recall that quite a few months ago, in fact, we stated there were just a handful of issues which those of us stacking or collecting or investing in gold and silver should be aware of in the coming months, namely the US-China trade deal, Fed and interest rate decisions, the repo markets, and 3 geopolitical issues, North Korea, Turkey, Syria, and Iran. And we all know that the latter has now risen to the top of this list in the last few days, resulting in the consequential rise in gold prices at a time when, quite frankly, they could have easily fallen back just a little. Now, on Friday, US stocks were down and under pressure because of the airstrike against General Soleimani and the prospect of retaliation. In addition, US yields moved lower, encouraged by a softer than expected ISM manufacturing report, with the index falling to 46.3, its lowest level since June 2009. This, of course, resulted in higher gold prices and, from a technical point of view, tested September highs resistance levels of 1535. With both the 10-day moving average crossing the 50-day moving average, this suggests that an uptrend is in place, with the MACD suggesting higher prices. But we have to note that the RSI suggests a correction may not be that far off. Silver has also had a moderately strong week, but resistance again is being found at the 1815 level and will again then at perhaps 1825. But we've addressed this issue in our latest videos. Now, it's important to note that all pumpers and their acolytes were out in force, all spewing the gold and silver going to the moon argument, as clearly the Iranian situation certainly suits their narrative. Now, if something drastic happens, they will be right. But we are still just mildly bullish gold at this stage, but we wish to see how traders react and respond tomorrow and Tuesday, where reasonable volumes will then result, before we tie our sails to the mast, so to speak. It is, to be fair, more likely that prices will rise tomorrow, but it's not a foregone conclusion that it will be a significant rise, unless, of course, more geopolitical events occur overnight. Now, we stated on Thursday that the downside for gold was around $75 and the upside just over $175 over the coming couple of months, of which over a third, and not that far off a half, has been achieved. Now, on Wednesday, we're going to produce a comprehensive midweek report, as we need to see traders' reactions tomorrow and Tuesday, and also get a better picture as to what Iran is likely to do. We would buy gold as a precautionary measure, especially if one is light in their holdings, but we would not go mad, as this situation could also reverse. Now, taking a look at the economic information due to be released this week, tomorrow we have the Market Services PMI for December, Tuesday the Trade Deficit for November, the ISM Non-Manufacturing Index for December, will be interesting, and factory orders for November. Wednesday, Consumer Credit for November. Thursday, a number of Fed governors will be giving their economic assessments. That'll be an interesting day to listen to. But on Friday is perhaps the most important, as far as trade information or economic information is concerned, because we have the non-farm payroll report for December, together with the unemployment rate and average hourly earnings. And also, the wholesale inventories for November will be announced. So our view is perhaps some follow-through, slightly stronger gold and silver prices at the start of the week, but a trend will then soon establish itself, which could, frankly, be in either direction, although the odds are more likely to be to hold gold at 1,500 and silver at 18, and then likely to rise from there. But it's all totally dependent on Iran. The end of the week, Friday, will also be critical, together with any news regarding the signing of the US-China trade deal. So you see, not all of the information we're going to get is going to be negative, unless, of course, that falls through as well, in which case then we would certainly be saying, right, gold and silver prices are definitely going higher. So, not forgetting that on Wednesday we shall publish a more comprehensive review of where we believe these various markets are heading. We would ask you, meanwhile, to listen to the last three videos we've produced, and to watch the geopolitical situation very closely. President Trump has drawn a line in the sand. I think all parties know where that line is, and all parties know what the consequences will be if they cross that line. This is the potential for a very major market move. For equities down, for gold and silver up. But it's still not a foregone conclusion if Iran perhaps adopts a more measured response and behaves itself. Now, whether you believe that will happen or not, we shall have to wait and see. Thank you for listening. If you haven't already done so, please subscribe to our channel. Press the bell sign so that you're notified of videos as and when they are published. And kindly go over to our website, illuminatisilver.com, and sign up as either a free or paying member. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.